All right, Amazon. Let's start off with Chris. What were your raw thoughts on earnings?
I mean, me and Vitaly, we were talking about it for the last 3 weeks, saying, look, they had all this capex that was brought forward. Now they're not doing as much capex, which means that most of their cash is free cash flow. If you look at their free cash flow numbers, they were monstrous. So of course now everyone's like, "Oh my God, Amazon's a great company." Like, yeah, that's what
Amazon
happens.
makes money, everybody.
Yeah,
Congratulations.
congratulations. People figured it out. So their ad revenue business doing gangbusters. Their AWS business has always been their moneymaker for them, right? Now they're spending less on CapEx. And Andy Jassy has been really trimming the fat from this company for the last year. And I think they're finally starting to show the results. So this is a great thing for Amazon. I think this will be a great catalyst for them to hit all-time highs again. It's going to happen. No matter the economy at this point, Amazon is on a steady course to recover to where it was before. So I would say, a lot of people probably feel like, oh, they missed out on the Amazon train. Dude, Amazon is a continuously growing beast, and it's going to keep growing. So this is one of those companies that you just need to put in your portfolio and just hold on to it forever, because it's one of those companies that'll make money. I don't see anyone even remotely close to replacing Amazon and what they do.
Chris, why does everybody tell us, like, when Meta was down, that sucks, that's dying, that's going away. Amazon was down, that sucks, that's dying, that's going away. Google was down, I'm talking about $85, $80. Yeah, whatever. That sucks, that's dying, that's going away. Like,
yeah, it's what it is. No, you know what it is when things go down. It's one of those things that, like, it's the fear sets in, and there is this negative reaction to, oh my God, you said that this stock was going to be up. Now it's down, which means that you don't know what you're talking about. And then it just feeds in on itself. And people do overreact. Like, I would say PayPal is another great example of people just overreacting over something that's very mundane. And actually, if you look at the numbers, they were really good numbers. Companies doing well. So I would say that right now is a time when people are scared to be buying into these companies and, holding on to them. Now, the one caveat that I'm just going to say really quickly is, do not try to time the recovery, because you saw Meta's recovery was just instant. Like, I'll be honest, I had no idea Meta could recover to $300 within 6 months. Like, that was not on any of my cards. All right. But at the same time, I didn't think that they weren't going to recover. I always knew that they were going to get back.
Well, my call said I had 2 years. So that's what it was.
But the difference is Disney. Disney is actually a dead company, and they are finished.
No one's saying that too, by the way.
Yeah.
These companies are all, once again, we talked about America being like the best. These companies are unstoppable in the long term. They're just all unstoppable. Well, whether some are better to invest in or others, that's a different story.
You bring up a point that I was going to mention about Apple, and maybe we talk about Apple next. But you're touching on something that I was thinking about yesterday, about like the life cycle of companies. I wanted to get you guys' opinion. So, to take a company like Netflix, for example. A company like Netflix comes out of nowhere, IPOs as one type of business, creates an entirely new market, and grows massively for several years. At a certain point, someone like Netflix, say when everyone that wants Netflix on the planet has Netflix, they can no longer grow. So they're going to have to change their business model, and they basically just become a cash printing machine. At that point, you would expect that that's when the company goes from a growth cycle, and now they become a more value play, and then they would eventually pay a dividend. But now you get companies like Amazon, you get companies like Apple, you get companies like Microsoft that have grown so much at $2-3 trillion valuation. At what point do we consider these companies stores of value? Do we consider them more like gold, but they pay a dividend?
I think it's obvious. I know what you're asking. It's like when does it become AT&T?
When does that market cap get so damn high, right?
Yeah, it's not the market cap. It's the growth. It's what they do in the business. If Apple figures out a way to make Vision Pro and then a car and then something else, they're continuing to evolve that company. Thank you. That confused me.
Whoa. So, I had a feeling something was off. I was like, wait a second. Vitaly's usually looking down at people, arguing and yelling at them.
No, but I'm saying, look, Apple's obviously still innovating, even if it's not as fast as it used to, because it's hard to grow a $3 trillion company, but they're still innovating. Amazon is clearly innovating. Google is still doing it. So when they stop,
And I'm not arguing that, but what I'm saying is, if 500 billion comes into Apple, right? Like if you put 500 billion dollars into Palantir, you get that the multiple on that is insane. But it comes a point where the typical amount of money that can flow into a company becomes such a small percentage of their already existing market cap that what you essentially have is a store of value. I mean, that's the point of gold, right?
But I think that's why KRIS and Vitaly are
high.
looking for a 2x over the next 5 years. I think that's why KRIS and Vitaly are like, they've always said Google, Amazon.
But okay, for you to get it, but
actually, my call's already around 2x. KRIS, yours should be 2.
There you go.
Yep.
It's already there.
For Amazon, but Amazon, I mean, just looking at Apple as like the largest company in the world. Amazon right now is around 1 trillion, right? Or maybe
1.3, 1.5.
Right, okay, a little bit more. All right. So for Amazon to hit Apple's numbers, you're going to get it. That's a 2x, but that is $1.7 trillion.
Not easy.
It's not easy to get it, but you could get it. Theoretically, you could get it. But until we have a $6 or $7 trillion company in Apple, what you're looking at is a small percentage of gains, right? You're looking for the dividend. And you're also looking for protection on the downside where you can feel comfortable putting in tremendous amounts of money. So it's almost like the way you would see as an ETF, like a retirement account. I can put my money in there and I know it's going to be safe and relatively not bulletproof.
Look at this. What's
relatively
going on?
insulated from.
You know, can y'all save the money until after?
No.
After
Do not
we
save
go
the
to a
money.
new channel. No.
true.
Save your money until after, because he doesn't
Wait,
share anything with us. He doesn't share anything with us.
That's a dollar. That's a
still haven't
dollar
gotten
a day.
I thought that was 36. I did not see that was 365.
No, that's 300.
But that's Canadian, right? Is that dollar?
It doesn't matter. It's like
Where
a
we
couple
at?
of dollars. Whatever. I'll take. Yo, Amit,
273
Amit.
US dollars.
Damn. Yeah, I thought it was
Amit,
like
we-
pesos or something. I got excited.
Listen, we need to have this conversation again about this monetization.
So I think
sharing, bro.
Wayne Lin, thank you.
know,
First of all, you
thank
have
you.
I think you've passed everybody. That's the most.
You are,
He gave me $1 a day. Thank you, Wayne. I really
Thank you.
appreciate that.
That
And
is
by the way,
so cool.
this is Apple's fault. We're about to talk about Apple because if it wasn't for
Amit,
Apple,
we
we'd be on
expect a
YouTube.
check at some point. This is getting ridiculous.
Yeah,
Lovely.
bro. You better get that 1099 ready, boy. That's what I'm waiting for.
I'm sending you my W9.
365. I feel like a little stripper in the club talking about
Yeah,
investments.
he's
and
gonna
Apple
come
and
on. He's gonna come on the podcast tomorrow with a new watch and be like, "Hey guys."
The worst part is, bro, YouTube takes fucking 50% of it.
He keeps telling us that, but we haven't gotten 1%.
Listen, YouTube
It's
takes
100% from you guys.
Hold on.
You guys
YouTube takes 30% and Amit takes 70%. So I mean, we're still fucking losing.
Okay, well, thank you, Wayne, for that. That really means a lot. We appreciate you, man.
And yes, please ask some kind of a question.
So,
Like, seriously, steer the conversation somehow when you're putting in that.
No,
much
that's
money.
fine. You can throw money at us. I have no problem with that. You don't have to steer it
But
anyway.
Jesus Christ! If anyone give him the floor for a second, that's really. cool.
But
There we
Carlos, let me quickly answer. So at some point, it depends on the company and like how the shareholders end up like pursuing the valuation. So as an example, some companies will steer. I mean, some shareholders will end up inevitably steering the company in the wrong direction sometimes. So basically, if you have a company that's doing really well financially and growing, sometimes you'll have like an activist investor say, you know what, why are you making so many side bets? Like Google right now makes a fuck ton of side bets, where basically they invest in everything. Google Fiber, Waymo, satellite, this, blah, 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 this, everything. Why? Because what they're doing is throwing so many darts at the dartboard and seeing what sticks, because that one dart that does land in the bullseye can
Google
actually
Maps,
end up
right?
being
Google Gmail,
hundreds
is one of those. Gmail's
like
one of those.
Google was in,
Chromebooks, and all that.
Chrome, Google Chrome,
Yeah.
the browser.
Google was doing AI before we even spoke about AI. Like, remember, these guys were doing AI since 2015, 16, 17. And that entire business was a trash pit money loser. Okay. Literally, they were taking money, putting it into a project that was getting no return whatsoever with no future guarantee of any cash flow. But the minute that this became something popularized, they were ready with the product waiting. Same thing with Amazon. Amazon spends a shit ton of money on developing their own chips, right? Yep. Amazon doesn't need to do that. Amazon could just say, you know what? We could just keep buying NVIDIA chips. We don't need to do any R&D whatsoever. But that's where the problems start. So if you see a company stop doing CapEx, stop doing R&D, that is the sure sign way of saying, you know what? This company will, not today, but 5 years from now, fail. So
that's the argument that they're making now against the investment in the metaverse. Right now, someone posted the other day that the investment in Reality Labs has lost half of the money that Elon spent on Twitter. They're saying people complain he's spent 44 billion and threw it in a shithole, right? And right now the current valuation on the street is $11 billion for Twitter, so it lost 75% of its value. But they're saying Zuck spent 22 billion on this company.
No,
but if
Carlos,
if it pays off, that's a money printer, right? But if it doesn't pay off, then but you have to. The thing is, if these companies don't do that, then you basically die on the vine. You need to continue to spend money to find what that next thing is.
And that's the key right there. Like one of the bull cases that me and Vitaly and we had about Meta was that everyone was looking at the metaverse spending and saying, this is stupid. Why are they spending so much money in this specific region? But remember, they were also getting a lot of information, a lot of data on how to do targeted advertising to bypass all the bullshit.
And building AI infrastructure. They built all of that out.
Yeah. And so a lot of that stuff. So when people were looking at Meta saying, look, in terms of operating cash flow, they're burning all this money in the metaverse, like, and it's not going anywhere. That was very reductive of people thinking. That's why it sold off 70%. But the minute that me and him, we were talking about this in the Discord for like months, literally there were entire threads based on it. And it was, how is Meta, whose primary business is targeted advertising, going to bypass Apple's bullshit with their privacy changes? Well, the way that they did it was via AI. Who wasn't able to do that? Snapchat did not invest in AI. They didn't think that
they were
that was
investing in like
necessary.
goggles.
They did the glasses.
Yeah. Yeah.
They don't, but
So-
they have nowhere near. They have nowhere
No,
near the
and that
capital.
thesis that you and Vitaly were discussing was really important because the narrative for why it got to 88 was it's the next AOL. So unless you figured out that they were going to use AI to be able to bypass the advertising thing, it was going to be the next AOL. And because you guys figured that out.
I think this leads to Carlos's earlier question, like at least what becomes a value stock? So AOL did not keep innovating, right? AOL just stayed where AOL was. AT&T is staying. You know how hard it is to get AT&T to install fiber at your house, for example? They don't want to upgrade their infrastructure. They don't want to be the first mover in this type of stuff. Meta, Google, Amazon, these are the first movers. They're willing to burn money like nothing, like no one's business in order to create the next thing that you have to have. But people discount it. People discount it all the time.
The larger question is I've never heard or seen of a stock, a single stock that can at some point grow so large and become so entrenched in a society that it actually becomes a store of value. And I think we are alive for this point where these companies, like right now, these massive mega trillion-dollar companies, if they continue to grow, like it's going to be very hard for Apple to lose more than 1 or 2%, no matter how hard they get hit. And here's the other thing. If they're smart and they continue to split the stock and keep the stock at the $100 price, like Amazon was super smart to bring it down, the options plays on those will make up for the fact that you're not going to get that appreciation on the shares.
Well, it keeps bringing in investors in who don't understand market caps, so it keeps the flywheel going.
Like if Mercado Libre split in 10 right now, there would be so many more.
If what?
If Melly split from like 1,000
exactly,
to 120
exactly, yeah, and that I was talking about that with Tanner at $3,000 a share, or when Amazon was $3,000 a share, it was the high roller table. But as soon as they dropped onto 100, just look at what the options chains are on that.
It was hard to buy. I was buying, but it was like
you're buying an M1 because it's a freaking
no. I was buying, but it was like 1 or 2 shares or 3 shares.
Right, it's all you could afford.
Yeah.
But now, if you had 1 or 2 shares of Amazon at the $3,000 price level, right?
Yeah.
And then suddenly they split 20 to 1. Now you've got whatever thousands of shares. You can start making money on covered calls and selling puts against those shares now. So it actually becomes an extra bit of revenue that also will force you to hold it for that length. And now you're not selling those shares.
Well, it was easy. It's easier for me to do, like with KRIS, it was easier to do the options because at 3,000, I can't afford 100 times 3,000.
That's right. That's your net worth. It's your net. But it also forces those shares to be locked in.
And see, that's where spreads are amazing, because spreads will let you leverage the top and the bottom so that this way you can actually do I would say a bigger risk to reward play, like a better risk to reward play, because what you're doing is risking a very little amount of capital for a shit ton more return. But the thing is that little capital that you do put is something that you can make a whole bunch of side bets, right? So it's almost like you can, instead of making one bet on a company and with just stock, and literally that's capital that it requires the company to do exceptionally well. With this one, yes, you're taking a little bit of a chance on the timing, but if you do the right timing on the spread, especially if you go out far enough, the risk to reward is actually very compelling. So it just depends on when you look at it. But like Amazon was perfect for a spread. Same thing with Google is perfect for a spread because these companies, that they have very little downside. You can kind of almost forecast the growth going forward.
Chris, now that Meta's had its run, can you tell us what your spread was on Meta?
No, I'm not. The one decision that I've made is I am no longer going to discuss whether I buy or sell stuff on YouTube and anything else. I'm just not going to do it. I'll talk about companies all the time because I'm getting so much flack for making certain moves, and the reasoning
Where's the flack
behind
coming from? On Twitter? Anonymous DM?
everywhere. Like
It
no, the
started from
Twitter
me.
mostly Twitter.
Rolls
No,
down to
you're
everybody
fine.
else.
You're fine.
From your co-host.
Yeah, some of this stuff, like I have my own reasons for selling, but it's almost like now I have to sit there and try to justify to everyone, and then I'm getting called a flip flopper, which sometimes I deserve.
or a
I'm
bottom
not gonna
feeder,
lie.
or a bottom
Dude,
feeder.
Or a
I don't
bottom
think
feeder.
first of all, I don't think
you
you
gotta
should.
own that. You gotta own that.
You are a bottom feeder.
But you're making money, bro. So I'm like, it doesn't fucking
You know what?
matter.
No,
It's
just
funny
The
that you
negative,
call
the
me a
negative
bo-
connotation
Yeah.
associated with like a bottom feeder when it's
You know,
more like a strategy. You're
what's-
buying a distressed asset, right? It's like buying a home that's a fixer upper, and you're like, I see the potential in him. I put some
That's
siding
true.
on the
Carlos,
wall.
That's true.
The
Fucking
fact,
flip this thing.
Carlos, he called me a bottom feeder, but he joined me in the bottom feeding.
Oh, I
for
know.
Meta.
You go on the Discord.
joined
you're
me in the
doing-
bottom
now
feeder
But
you're
I'm
for
still in it.
Amazon.
I'm still in it.
You go on the Discord now. It's all spreads. It's all
No, well,
fucking
the
spreads.
difference is, Chris, I probably do hold longer than you most positions.
Oh,
That
you
is,
What does that
definitely do.
matter?
You definitely
so,
do.
so
You
hold on. When I
definitely
buy
do.
the bottom, by the way, I do actually hold
Yeah.
it.
Yeah.
For example, like when I did buy Meta, I sold very little Meta even on this run up, like very little. Okay, so I still have the majority of my shares and calls. I'm still holding it because I still think there's upside.
I thought 300 you were getting rid of it. Oh, interesting.
I sold a little bit because Enphase was down. So if
Enphase
Enphase
much percentage of the overall?
I'm not going to talk about it.
That's
That's one
like
thing.
2%, 3%, 10%. That's all I'm asking.
No,
How
no,
much-
stop asking. No, we're
I'm
not
not
doing that
gonna talk
anymore.
about it.
Hold on. This
Yeah,
is a very simple. If you have 100 meta shares, my question is, did you sell 1 meta share, 10 meta shares? That's my question.
If you're on our Patreon, you'll see exactly how many
Yeah.
meta shares I sold.
I am on your
Take-
Patreon. I just don't check
Take
your
some of
videos.
the.
check it.
take
I
some
paid
of the
$10
super
a
chat-
month.
It's
take some of the super
$5
chat
for
money,
anyone
buy
who
us a
wants to
cup of
actually
coffee.
see my actual trades and not to follow them, just to see them. And what I'm talking about is not bullshit. I've made these trades. So the other thing is, well, forget the bottom feeder. I was going to go to you saying you should talk about what you're buying and what you're selling. That's okay.
I agree.
The difference is, I kept saying that's not the problem. The problem is not the trading. The problem is you pretended you were a long-term investor. Okay. You kept saying SoFi to 100 billion. You kept saying,
I still think
But I don't-
SoFi is
and that's the
going to
thing,
get to
TFC to
100.
45.
No,
So
no,
my
but
point is, if you were
Yeah.
just honest saying, look, I'm doing this because it's a good trade. It's at the lows. It's
Yeah, but-
52-week
but-
lows. I see a 20 to 40% upside, and I'm going to get the fuck out of it.
But VITALY, that's the thing. No one goes into any company thinking that, you know what, I'm just going to wait for a certain price and then I'm going to get out. What to
They
me when I'm
don't?
looking at
No, it's
because to
about-
me,
I'm sorry.
Yeah.
go ahead.
no, I was
Go
going to
ahead.
say, to me, I look at a company, I'm saying, you know what, this company has a lot of potential to go much further than it is where it is today. But if it gets there really fast and the market dictates that, you know what, maybe it's smart to take some money off the table, I'm ruthless. I'll take the money off the table. Like, I still think TFC is eventually going to get to $45. But the thing is, the run up to 37 to 36 was already there. So for me, it's like, okay, do I hold on to this and wait until it gets to my price target? Or do I look at some of the other companies that I'm looking at right now that are significantly more undervalued? And do I deploy some of that capital over there? So, I mean, I think that's one of the differences when it comes to investing. Like, I have targets where I think companies should be, but the closer they get to that target, the more likely it is for me to actually sell out of that position.
But I think that's what you say. I think so no one can say.
I think that's fine to say that.
Yeah.
Right? Like there's
Yeah.
because
If you said that,
But that's
if you said that, I made that clear. But I'm saying you didn't make that clear.
Yeah,
But
and
I
that's
think- but I think
yeah.
I think it is.
This is
I
a
think
good
it is.
comment by Blake, right? You're making a shit ton of money. People are making money, and some random motherfucker is saying what, like, all right, say whatever the fuck you want, but like,
Oh, yeah. So listen. I told you I'm in the PayPal trade. Obviously, someone on Twitter, I don't know. They basically, I brought up. I bought yellow calls. I don't know if you guys know that I bought some yellow calls, and they're down. Obviously, okay. It's like someone's laughing at you. Hey, ha, 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 ha. Oh, like bringing up an old tweet. I'm like, dude, this is 2025. Why don't you get back to me in 2025 and tell me if this is down? It's freaking ridiculous. People have to get their head out of the short-termedness of the whole thing. When me and Chris buy something, even though Chris would trade out of it, we both have 20, 25 calls.
Yeah,
we
could hold on
half.
to it.
But that's why you do it. That's
we
the
have
point.
a year and a half to 2 years soon coming up in September for our calls for our thesis to play out. So everybody has to calm down in terms of up and down swings in terms of one quarter. It doesn't matter.
But the point is that's why you pay the premium, is to have the time aspect on your side, so that you give your thesis time to play out. But if I'll tell you right now, if I bought some Tesla options and the shit shoots up to $400 tomorrow, they're gone. That Tesla is gone. I don't care about the extra premium that I paid for the time, because it doesn't make sense when you hit, say, a certain multiple. It becomes irresponsible not to sell.
No, I agree.
And I think a lot of what happens with KRIS, especially in a market like this that's been sort of freaking bipolar, and we've seen this when stocks are up 10%. I mean, Solar Edge down 80% one day, Enphase up, back down. I mean, you have to react to the market conditions that you're given. And every time Jay Powell goes up there, the market's ready to do something crazy.
Yeah. Good investors know when to buy. Great investors know when to sell. I firmly believe that, because there are times where, the thesis that you have can play out very quickly. And then you have to really make a decision, like what's going to happen. And also factor in some of the macro as well. Because if you don't factor that into your equations, you could be caught off guard and be put in a very difficult position. So I'll give you an example. Right now, I think that we are due for a probably 5 to 10% correction from where we are today. Even though I think we'll probably finish the year strong, I wholly agree with Tom Lee with Fundstrat. I agree. We have run up very high. The CPI number looks like it's actually going to be pretty bad coming in, where you're going to see a reacceleration of inflation. So if you see a number like 3.4, 3.5, some of these companies are going to dump 5, maybe 10% down. But that's where I know that those
spec will dump 30, 40, 50% down.
Right. And that's where I know that there will be times where there is actually great times to actually pick up companies that are super undervalued. And that's where everyone has to do their own thing when it comes to finances. But just keep in mind that just because your thesis on a company is there, don't ignore the macro. Because if you ignore the macro, you'll miss out on amazing opportunities.
Look, I want to interject, because you're right about the TFC spreads. You should have sold, by the way. That's the right thing to do. There's spreads, there are options. If your options, by the way, in my opinion, are up over 50%, you should sell the options, because they can turn on you on a dime. In fact, in most cases, I'm not saying.
Listen, that actually burned me. That
burns everybody.
Not all the time, but that actually burned me. I bought 1 month call options on Apple before the Vision Pro announcement.
Yeah.
And when they were up 67%, I sold them. And then in the same time that I had them, they made an all-time high.
So but I'm saying it could turn on, it could turn on you in a dime for options, especially. But the one thing I think me and you disagree on, once you have a real thesis on a certain company, and I have 1 or 2 companies, as you know, Enphase and Tesla, not hiding it. Obviously, Google, Amazon are there as well as big positions, and Meta.
And Pouncer.
So once you have that strong thesis, it's very irresponsible, by the way, when it's going down, to start trading out of it. And there are people who are tweeting at us who are trading out, I think Carlos was responding to some of them. I don't even respond. That they're trading out. They're waiting for a better bottom, a better this.
In Enphase?
Yeah, in Enphase. So some guy traded out. He's waiting for a better bottom. You were responding to him.
Anyway, yeah.
My point is that this is silly. Like, we don't know what those companies, because there's such cash printing machines. These are real cash printing machines. We don't know what they're going to do. That anytime they will announce something fundamental, they're going to turn on a dime. And I am not smart enough, and I know this. I am not smart enough to get that bottom and then catch it on the way back up. Maybe, KRIS, you're saying you are, but I'm not. And the fact is, me and Carlos were investing when Tesla was on the way down. Remember? Everybody was shitting on it. Elon was smoking weed. All this is happening. All the news is terrible.
I like to be buying when they're on their way down and selling when they're on their way up.
They're on their way up. Yeah.
In general.
So now people
lose out. Okay, I lost out, but I went out on a high.
But I'm saying people now are looking at the market right now. All these great companies are dumping, and people are scared. They're scared about the great companies dumping. Okay. We are past the COVID problem. We are past 2008. We don't have the same issues. People should be less afraid, because those issues were worse than they are today, in my opinion.
Okay, we got to move on to Apple, but real quick before that,
and Solar Edge. I want to show Solar Edge.
Yeah, Jed Luke, he is KRIS's Patreon, so he doesn't want KRIS to say anything. He wants all the
and actually that does make sense. That makes sense.
I agree.
If someone is paying you for that sort of specific information, then they are taking responsibility for whatever their actions are based on what you say. When you're giving out information for free on YouTube, people could come in, catch it late, misunderstand what
Then
you're
they
saying,
curse you out. All
you
this
should
shit, yeah.
absolutely keep doing what you're doing, but put that behind a paywall.